Hello everyone. Let me introduce myself. My name is Devi Larasati, NPM 234111004, from Class Management 23 DEX. Here I will explain the material. The definition of tax. Tax is a mandatory contribution paid by the public to the state based on law, without any direct compensation received, and used to finance public interests. In other words, when we pay taxes, we do not directly receive specific goods or services in return, but the benefits are felt indirectly, such as through the construction of roads, healthcare facilities, education, and security. Taxes are the largest source of state revenue to run the government and finance development. According to Law No. 28 of 2007 on General Provisions and Procedures for Taxation, tax is a mandatory contribution to the state owed by an individual or entity that is coercive under the law, without direct compensation, and used for the needs of the state for the greatest prosperity of the people. Types of taxes. In general, taxes can be classified into several types, namely, 1. Based on their nature. Direct tax, a tax paid periodically by the taxpayer to the state, and its burden cannot be shifted to another party. Example: income tax, PPH. Indirect tax, a tax whose burden can be shifted to another party, usually paid when a transaction occurs. Example: value-added tax, VAT/PPN. 2. Based on the collecting authority. Central tax collected by the central government through the Directorate General of Taxes and used to finance national needs. Examples: PPH, PPN, stamp duty. Regional tax collected by provincial or district/city governments to finance their respective regions. Examples: motor vehicle tax, hotel tax, billboard tax. 3. Based on other classifications such as subjective tax, based on the subject, e.g., income tax, and objective tax, based on the object, e.g., VAT. Elements of tax. In tax implementation, there are several elements that form it, namely: 1. Tax subject, the party obliged to pay tax, which can be an individual or a business entity. 2. Tax object, anything that is taxed, such as income, goods, services, or ownership of certain assets. 3. Tax rate, the percentage or amount that must be paid based on the tax object. Rates can be fixed or progressive. The larger the tax object, the higher the rate. 4. Tax base, the value used as a reference to calculate tax, such as the selling price of goods or the amount of income. That's all my presentation. Thank you.